News trading, is it a golden ticket or just a stress machine? Traders love the thrill, but is it actually good for you? Picture this, you're sitting at your desk, charts open, economic calendar flashing red because non-farm payrolls are about to drop. Your palms are sweaty, your mouse is hovering over the buy and sell buttons, and you can almost hear your own heartbeat in your ears. The clock ticks down 3, 2, 1, and suddenly the market explodes. Candles shoot up like rockets, spreads widen, your broker freezes for a second, and by the time you react, the price has already jumped and reversed. In those few seconds, you're either in profit or staring at a painful red screen. That's the reality of news trading. It looks glamorous from the outside. Quick profits, big moves, the feeling of being part of global events as they unfold. Inflation numbers, central bank speeches, interest rate hikes, election results, you're right there in the action trying to capitalize on it. Feels like Wall Street meets adrenaline. But here's the other side. News trading is also where accounts get wiped out in the blink of an eye, where spreads chew through your stop losses, slippage leaves you helpless, and one wrong move can undo weeks of patient gains. It's not the calm, calculated type of trading most people imagine. It's messy, chaotic, and brutally unforgiving. And that's why I want to explore this today. Because while everyone talks about strategies, indicators, and setups, very few stop to ask the bigger question. Can this type of trading really be good for you, especially from the psychological perspective? Is it something you can build a sustainable trading journey around? Or is it just another flashy temptation that drains your account and your mental energy over time? For me, news trading isn't just about charts. It's about what it does to your mind. The stress, the anticipation, the emotional highs and lows. So before we dive into the mechanics, I want you to keep that question in mind. Is news trading really good for you? Or is it just another stress machine disguised as opportunity? News trading might feel like a modern game, something born in the age of Forex factory calendars and Twitter headlines. But the truth is, it's as old as markets themselves. Traders have always chased information, and the ones who got it first almost always had the edge. Take the early 19th century. One of the most famous stories comes from the Rothschild family during the Battle of Waterloo. Legend has it that Nathan Rothschild received news of Napoleon's defeat before anyone else in London. While the public still thought Napoleon might win, Rothschild quietly bought up British bonds at cheap prices. When the victory was finally announced, the bond market soared, and Rothschild walked away with enormous profits. That was news trading in its rawest form. Information equals money. Fast forward to the late 1800s and early 1900s. Traders clustered around telegraph wires and ticker machines, waiting for updates on wars, harvests, and government decisions. News meant movement, and movement meant opportunity. By the time radios came along, entire rooms of investors would sit glued to broadcasts, ready to place trades on the latest announcements. Then came the modern financial era, the 1970s oil shocks, central bank interventions in the 80s and 90s, currency crises in Asia and Latin America. Each event turned headlines into market chaos, and sharp traders tried to ride those waves. And today, news trading has gone digital. We're talking economic calendars, Bloomberg terminals, Twitter feeds, and algorithmic systems that react in milliseconds. What once took hours or days to hit the market now impacts prices instantly. Retail traders like you and me can trade on news, but let's be honest, we're competing with hedge funds running lightning-fast algorithms, and that changes the game completely. So while the tools have evolved, from horses carrying battle reports to tickers and radios to real-time push notifications, the heart of news trading remains the same. Being first, reacting fast, and taking advantage of human emotion colliding with hard numbers. But here's the real kicker. Just because it has a rich history doesn't mean it's practical or sustainable for the average trader. And that's where the psychology starts to matter. Fast forward to today, and news trading has become one of the most talked about strategies in retail circles. But let's strip it down to what it really is. At its core, news trading means reacting to scheduled or unscheduled events that shake the market. Economic releases like the non-farm payrolls in the U.S., inflation reports like CPI, interest rate decisions from central banks, these are all fireworks shows on the trading calendar. One headline, one data release, and prices can move faster in 30 seconds than they do in an entire week. But it's not just the scheduled events. Geopolitical tensions, sudden wars, unexpected resignations, natural disasters, even a single tweet from someone influential. These can all trigger the kind of volatility that news traders dream about. The appeal is obvious. Volatility equals opportunity. In just a few minutes, you can catch a move that would normally take days or weeks. That's why you see traders huddled around economic calendars, setting alarms, and waiting like sprinters on the starting line for the next big announcement. But here's the reality check. News trading today isn't just man versus market anymore. It's man versus machine. Hedge funds and banks run high-frequency algorithms that read headlines, interpret them, and execute trades in microseconds, long before your finger even clicks the mouse. What does that leave retail traders? A battlefield filled with wider spreads, delayed executions, and whipsaw price action. And this is where the contradiction lies. News trading offers big potential, but it also brings big traps. Brokers widen spreads the moment news hits, liquidity can vanish, and what looked like a golden trade can turn into a nightmare of slippage and instant losses. So when people talk about news trading today, I see it less as a strategy and more as a test of speed, nerve, and mental control. On paper, it's simple: trade the news, catch the volatility. In practice, it's one of the most brutal styles of trading out there. Now, let's be fair, news trading isn't all doom and gloom. There's a reason so many traders, myself included at one point, have been attracted to it. On the surface, it has some very real upsides. First, the potential for quick profits. Unlike swing trading or position trading where you might wait days, weeks, or even months to see significant results, news trading can deliver a big move in a matter of minutes. One sharp entry on the right side of a news release, and suddenly you're staring at a profit that would normally take you weeks to grind out. That rush of instant reward is powerful. Second, the adrenaline factor. Let's not pretend it's exciting. Sitting in front of the screen, waiting for the announcement, feeling your heart rate climb as the clock ticks down. It's like being on the edge of your seat in a high-stakes poker game. For some traders, that thrill is addictive in itself. It makes trading feel alive, like every second matters. Third, news trading forces you to stay plugged in to what's happening in the world. You're not just staring at lines on a chart, you're paying attention to interest rate hikes, employment numbers, inflation data, and political decisions. In a way, it makes you more globally aware. You start to understand how economics connects with market movement, and that can sharpen you as a trader overall. And finally, for those who get it right, there's a sense of being in the action, of timing the market, of catching the big move when everyone else is caught off guard. Feels like you're smarter, faster, and ahead of the crowd. And let's be honest, that feeling of outsmarting the market is intoxicating. So yes, the good side is very real. Fast profits, excitement, knowledge, and the thrill of being at the center of global financial drama. That's the light that pulls so many traders toward news trading. But like every light, it casts a shadow. And the dark side of news trading is where many traders find themselves burned. Here's the part that most traders don't post on Instagram or brag about in Telegram groups. The bad side of news trading. And trust me, it's very real. The first thing you notice is spreads widening. Brokers aren't stupid. They know news brings volatility, and to protect themselves, they crank up spreads right before the release. So even if you're right about the direction, you might open a position and instantly be down 20, 30, 40 pips just because of the spread. That's a painful way to start a trade. Then there's slippage. You hit buy or sell at the perfect time, but your broker fills you at a completely different price because the market is moving too fast. You had a strategy, a setup, even a clear plan, but execution kills it. It's like trying to grab a train that's already moving at full speed. You think you've got it, and suddenly it's gone. Next up, fake-outs and whipsaws. The market doesn't just move in one clean direction after news. Often, it spikes violently one way, sucks traders in, and then snaps back the other way, taking out stop losses like a vacuum cleaner. You can be absolutely right about the fundamentals and still lose because the market decided to play games with liquidity first. And of course, let's talk about the psychological impact. The stress is relentless. Sitting and waiting for the news release feels like waiting for exam results or a medical test. You know something is coming, but you don't know if it'll save you or wreck you. One mistake can tilt your emotions so badly that you start revenge trading or over-leveraging, hoping to win it back. That's how small losses turn into blown accounts. And here's the brutal truth. You're not just competing with other traders. You're competing with algorithms running at lightning speed. These bots read the headlines and execute trades in microseconds. By the time you've processed the news with your human brain, the move has already happened, and you're left picking up scraps if you're lucky. So while news trading promises fast profits, the reality is that the deck is stacked against you. Between spreads, slippage, whipsaws, and the mental roller coaster, most traders end up bleeding more than they gain. That's why I call it a double-edged sword. On one side, opportunity. On the other hand, destruction. And the question you really have to ask is, can your psychology handle that kind of pressure day after day? Now let's move past the charts and spreads and talk about the real battlefield in news trading, the mind. Because whether you win or lose, your psychology takes the biggest hit. The first thing is anticipation stress. Sitting in front of the screen, watching that countdown timer, it does something to you. Your body doesn't know you're just waiting for a financial release. It reacts like you're about to fight or flee. Adrenaline pumps, cortisol spikes, your heart rate climbs. By the time the news actually drops, you're already halfway drained, and the decision you make in that state is rarely your best one. Then comes the addiction factor. News trading has a casino-like pull. You get that rush when you win, that sting when you lose, and both keep you coming back for more. It's not the steady, rational mindset of a long-term trader. It's the dopamine roller coaster of a gambler. You start living event to event, chasing the next non-farm payrolls, the next CPI, the next Fed speech. The market becomes less about strategy and more about chasing the next high. And let's not forget decision fatigue. News trading forces you into high-stakes decisions in seconds. Do I jump in now? Do I wait? Do I close? Even if you only trade a few events, the mental load is heavy. Over time, that fatigue eats away at your discipline. You stop following your rules because your brain is simply exhausted. But the harshest part is emotional tilt. When you're wrong in news trading, you're often violently wrong. A single mistake can wipe out weeks of careful gains, and that frustration is a powerful trigger. Traders start revenge trading, doubling down, chasing the move they missed. And suddenly, what started as one bad trade turns into a spiral. This is why I say news trading isn't just about money. It's about your mental capital. And if your mind is constantly battered by stress, adrenaline, and emotional swings, it's only a matter of time before your account follows. So when people ask me, is news trading good for you? I can't just think about the profits. I have to think about the psychology. Because if your head isn't stable, no strategy in the world will save you. Here's where I have to get personal with you. I've sat in front of my screen, waiting for the news to drop. I felt that adrenaline hit, that mix of excitement and fear when the candle explodes and the market goes wild. I know the thrill of catching the move just right, and I also know the sting of being completely wrong. For me, news trading has always felt like a double-edged sword. On the one hand, there's that undeniable rush. It makes trading feel alive, like you're at the very center of global finance, moving with the world as it reacts to breaking news. On the other hand, I've seen how draining it is, how it eats away at your discipline and stability. I've asked myself, is this sustainable? Can I really build a trading career off moments of chaos? And the honest answer I've come to is no. At least not for me. Because news trading doesn't just test your account, it tests your mind. And I've learned that consistency, patience, and emotional control are far more valuable than the occasional adrenaline-fueled win. That doesn't mean I dismiss news trading entirely. I think it can be useful. It sharpens your awareness of global economics. It teaches you how fragile emotions are under pressure. And sometimes, yes, it can give you a good trade. But as a lifestyle, as the core of a trading approach, I just don't see it as sustainable. If trading is a marathon, news trading feels more like sprinting while juggling fire. You might pull it off once or twice, but eventually the flames catch up. And for me, the cost, mentally and emotionally, just isn't worth it. When you strip away the hype, the flashy screenshots, and the stories of overnight success, the question remains, is news trading actually good for you? From where I stand, the answer depends less on charts and more on psychology. If you're the kind of person who thrives in chaos, who enjoys stress, and who can accept being wrong, sometimes violently wrong, without losing your head, then maybe news trading has a place in your toolkit. It can give you quick profits, sharpen your understanding of economics, and deliver that adrenaline rush some traders crave. But if you value stability, patience, and long-term consistency, then news trading is probably not good for you. Because the reality is, most of the time, you're not competing against other human traders. You're competing against machines, institutions, and a market that doesn't play fair when headlines drop. For me, it comes down to this: news trading is good as an experience but not as a foundation. It's like drinking a strong cup of coffee. Sure, it wakes you up, maybe even gives you a boost, but if that's all you rely on every day, you'll eventually burn out. So, is it good for you? That's something only you can decide. For me, I've chosen the calmer, steadier path. I'd rather build a trading routine that supports my mind than one that constantly tests it. Because at the end of the day, your biggest asset in trading isn't your account size or your strategy, it's your psychology. And if a style of trading breaks that down, then no amount of quick wins will make it worth it. So, we've walked through the history, the highs, the lows, and the psychology of news trading. And now we're back to the question we started with. Is news trading good for you? For me, the answer is no. It's thrilling, yes. It's educational, yes. But sustainable? Not in the way I want to trade. I'd rather protect my mental capital than gamble it on moments of chaos. But here's the thing. I'm not here to hand you a rulebook. I'm sharing my perspective, my experience. Maybe you see it differently. Maybe you thrive on the adrenaline, or maybe, like me, you've realized that the constant stress just isn't worth it. At the end of the day, trading isn't about copying someone else's path. It's about finding the style that fits you, your personality, your psychology. So let me leave you with this. Is news trading good for you? Or is it just another stress machine disguised as opportunity? Think about it. And then tell me what you believe in the comments. I'd love to hear your perspective. If this breakdown gave you something to think about, hit that like button, subscribe for more trading reflections, and share this with another trader who's caught in the news trading cycle. Because sometimes, the best trade you can make is a mindset shift.